Hey, what's good, family? In this video, we're going to be talking about how to grow a small account. This video was inspired by one of your comments, so if you have any questions or comments, feel free to comment down below, and who knows, it may inspire me to make a video. And so without further ado, let's get into it. The comment reads, I have only $100 to work with. I can't afford prices that are in the money, only the ones that are out the money. How can I navigate through that, save up, or something? I'm going to kind of answer this question in, I guess, two parts. First, I'm going to answer the question of how can you navigate through, how can you trade with $100? Then I'm going to get into how you can save up, grow your account, and have more to trade with. So to start off, I see that you say you don't have enough money to buy contracts in the money. And I say, yes, you do. I want to preface this by saying this is very risky. If you do this, you need to get in and get out. Whenever the momentum is gone, get out so you still have your money. But one thing you'll notice, if you're trading weekly contracts on Monday, if the stock price doesn't move, it's going to be a lot more expensive on Monday than it is on Wednesday. And then it's going to be a lot more expensive on Wednesday than it is Friday. So because of that, me typically on the front half of the week, I will trade an index like the SPY or the QQQ, something that has daily expirations. And then on Thursday and Friday, I'll trade regular stocks because their contracts are a lot cheaper. They don't have the time decay built in. And this works for the way I trade. Depending on your trading style, depending on whether you're day trading or whether you're swinging, is kind of going to determine which contracts you should go for. Me personally, for the most part, I day trade. And if you want to watch a video on the exact strategy I use, I break it down pretty simply. Hey, click on this link right here. It'll take you directly to the video. Highly recommend it if you're trying to day trade. If you don't have as much money to use, it shows you where to get in. It shows you where to put your stop loss, and it shows you where to target to take profits. And I find that using that strategy, trades work out about 4 out of 5 times. So there is a high risk to reward ratio. You can get 4 trades wrong trading with the same amount and get 1 right, and you will break even. As long as you're able to get 2 out of 5 correct, you're profitable. One of the things you can do is trade 0 day to expiration contracts. I want to emphasize how risky this is, how important it is that you get in and get out. And if the stock starts trading sideways in the day, you don't want to be in the stock while it's trading sideways, because as soon as it loses momentum, you have lost money on the contract. So you want to get in and get out. But the videos on my channel where you see me turning like $100 into like $300, that is usually because I'm trading 0 day to expiration contracts, and I am using this strategy that I am talking to you about. When it comes to buying a contract, I'll typically go no more than 3 contracts out of the money, and I will try to keep it between 30 and 70 cents. I found that that is kind of the sweet spot. On some occasions, I will drop down to like a $15, $17 contract, but that's only if the setup and the strategy shows for a larger move. Another thing that I would implement if I'm trading with a small account, once you double your account, if you have $100, if you started with $100 and now you have $200, take $100 out just in case you end up blowing your account. Typically in the beginning when you start trading, you are following the rules, you're sticking to your plan, and because of that you're seeing success. But something tends to happen in our psychology where we get comfortable and then we end up losing more than we just made. So take the money you made out initially, and then once you're strictly with profits, treat it like it is the money you started with and protect it with your life. I mentioned risk versus reward earlier. Risk and reward is a critical element. So the way I would do it if I have $100 is I have 5 trades that I can go a maximum of $20 down each on. That doesn't necessarily mean, hey, I can only buy contracts for $20. You can buy $70 contracts, and if they come down to 50, that is where you stop out and sell out. That is what risking $20 on a $100 account looks like. It doesn't mean, hey, I can only buy $20 contracts, because frankly, the quality of $20 contracts is not typically what the quality of $70 contracts are. So again, the game is to get in, get out, and trade high quality setups. Do that and you should be profitable. If you're up on a trade, let it go to the profit target. If you go to your stop loss, make sure you sell out. Stick to the plan. And when it comes to saving up money for a trading account, I would still say that it's a good idea to start trading with your $100 even if you don't have a full-size account yet, just so you get some experience trading with a smaller amount of money. And when you have your $1,000 account, you don't want to throw that whole $1,000 in on one trade anyway. You may trade with like $200 at a time on a $1,000 account. So for that, it's better to be used to making a lot with a little than to need a lot to make a little, because things do happen and options do occasionally move crazy, and it would just suck if you threw $1,000 in a trade and then the stock you're in just had a crazy move and now your option is worthless and your money is gone. I hope this video was able to help you in some way, shape, or form. If you have any more questions, comments, anything like that, feel free to leave them down below in the comments. If for some reason you're new here and haven't already, be sure to subscribe. And last but certainly not least, thank you so much for watching. Matthew Manuel signing off, and I want to change your life.